Hello, Warriors. How's everyone doing? I am feeling a bit better. Thanks for asking, Mary. Good morning to you.
Good morning, good morning.
Hey, how are you, buddy?
Yeah, good. Yourself, Dale?
Doing pretty good. Can you guys see my charts here?
We see your charts.
Okay, well then, if you see this chart right here, the winner of the Man Award is Stelios for buying silver 2301.
2401.
2401. Had his spot to enter, talked about it for 2 weeks, and bought it.
Yeah, that was pretty badass.
Clean
standards.
Clean it up, man. You know, you could have had it at 97.
Yeah, that was a great call.
I've put my stop at 2440, so I'm running that now.
Wow,
nice. Yeah, so
we'll never hear the end of it, says Richard. Yes, you're right.
The humblest guy at ForexAnalytix. It's a man. You guys know that song, "I'm the Man" by Aloe Black. So I used to hand out Man Awards. Great tune if you haven't heard it. So real nice call, Stel. And you could say one thing, back under these lows, there's problems, right? And it almost looks like the same thing in gold. Gold held this moving average, the 50 and the neckline here. So I don't know, are we going to get a continuation move up here? It's possible. Silver actually looks a little better. But gold, I still think, just like this is a major area, and the Dixie on the verge. I know a lot of people and myself thought we might get closer to 100. We didn't even take out this high. So, I'm not an Elliotician, but I've read about these before, that what you could have on the final thrust, it's rare. It's called a truncated fifth or a fifth wave failure. And then when these things happen, normally I would say, well, it's still going to do it. It's still going to do it. But you know what? We're so close to a breakdown that I'm thinking that's pretty likely that it was a fifth wave failure. So a lot of important signals happening here, and pretty clear areas to know whether the market's going to continue or reverse. Ryan, how you doing today, buddy? And Blake, jump in anytime.
Morning, Dale. Sorry, I'm just laughing at German CPI.
What was it? 85.4?
7.6%.
Oh, okay.
7.6% from a 6.7 expected, and Spain came in at 9.8%. They're my favourite to hit double digits first out of the Eurozone countries.
Yeah, and the Germans always were really anti-inflationists because of what they lived through. They have to, this I think, doesn't bother Americans as much because we've never really been through like a real severe, and like Blake has said, Daniela said, we've never had a food and energy shock simultaneously.
Yeah.
Anyway, but the Germans, after going through what they did with a currency failure, they were always hard money people.
Yeah,
when they had the Deutschmark. Huh?
They'll be spitting feathers over there.
Yeah. So what do you think? We're going to break down here, guys, in the Dixie?
Just looking at the way Euro's performing, it's looking very, very well bid. Still, though, we're in end of month orbit. Can't discount that effect at the moment. See where we are Friday into next week. If we're still up here, then it's potentially going to rally up further, 112, maybe even more, because at some point, the market's going to come right back around to saying the ECB are going to have to hike.
Okay, so on this first attempt to close back inside the wedge, it couldn't even hold it for a day. And here it held it for a couple of days before it was back underneath it. I think that you could, that if the euro's good, I don't think we should close back under 110 this time.
Yeah.
What do you think?
it's going to be interesting to see what happens, as I say, on the fixes, especially tomorrow. You know, if you get a decent amount of dollar buying tomorrow, you know, and that pushes it back under 111, you know, maybe down even towards 110, you've got to be thinking that might be worth a fade, worth grabbing along, as I say, and seeing if this is going to continue. You know, me and Stel been favouring euro this year. I've started my long build in euro sterling. You know, I did want to get some euro dollar, but the way it's performed over the last couple of weeks and with the Ukraine stuff, you know, I've just been a bit held back a bit. So
yeah, my Revolut account is long euros.
Yeah,
That's where I'm going to keep cash. Yeah, so the character of Aussie's changing a little bit, don't you think? I mean, with the leadership, Blake, possibility of some type of correction here in Aussie. I think Greg is looking for one.
Hey, good morning, guys. You know, I'm skeptical about going into month end with the dollar. If you look at the dollar, and here, let me grab the charts here. Just something I, you know, just was updating, you know, kind of across the board. You know, for first and foremost, I guess you know, you take your cues off of the euro. And the thing is, the euro is back above that 111.20 level, and you know, so that's like, let's just call that like one major strike against the dollar, right?
Yeah.
And then, you know, the risk, as we've been talking about this whole week, is that spike up into the dollar yen. You know, as we hit 125, that was like everybody knew the fiscal year end in Japan. That was a story that was circulating around the markets for the last, you know, couple weeks, and I'll be the first one to say that Kman, you know, several weeks ago talked about, you know, yen weakness into fiscal year end. So, but he wasn't the only one. He may have been one of the first ones. Then after that, everybody started talking about it. So I thought earlier this week, as we talked about, you know, on Monday, that the risk is that, you know, everybody bought or sold yen, excuse me, you know, into fiscal year end. And now we're seeing that reversal. So, and the reason why I'm pointing this out is because this is another strike against the dollar index. It's not just the euro story. It's now the euro and the yen story, but that's not the only story. Then you have the Aussie, as Dale, you pointed out, you know, could we get a correction? I don't know. We're up against really key resistance. And the fact of the matter is this high right here, and I shorted some Aussie dollars, not in the Aussie US dollar, but I shorted the Aussie dollar on crosses when we hit that level at the 75.30, because I was like, well, you know, this is a lower high and it doesn't look like we're going to make new higher highs. That was the case then. We got a little bit of a pulled back right to the breakout point, and now here we are back up again at those highs. The risk is if we start breaking those highs, then we move higher. And I'm not short the Aussie dollar per se. I'm short the Aussie against some, you know, on one cross. So with that being said, you know, if the Aussie breaks 75.50, I mean, it's off to the races. I am overall very bullish the Aussie dollar. Most people that listen here daily know that I'm just constantly buying the Aussie on dips. But you know, I think if you're trying to be bearish here, I think that's a risk. Then, and I'm just going to take you guys through the dollar complex. And by the way, just so you all know, if you are ForexAnalytix subscribers, this is something that we do every single day in about an hour's time with the ForexAnalytix community. Like yesterday, before the dollar yen hit 121.30 overnight, this is yesterday, 23 hours ago, support at 121.30. That was the actual low in the dollar yen overnight. We went as low as 121.30 to the pip, right? So this is the type of analysis that we do every day as a group, just so you all know that. But I'm going to do it to you guys. I'm doing it with you guys today because we're dealing with dollar weakness going into the end of month, and there are reports from banks that we're going to have dollar weakness going into the end of month, you know, as well. And a lot of that is contributed to the equity market bounce. So as equities bounce, a lot of dollars get redistributed, into different markets. So that rebalancing is dollar selling, blah, 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 blah. But we're seeing it right now, and we still have another day to go. So, we'll see how it all, pans out the next couple of days. But I'm going to say, look at the Kiwi. Look at how buoyant it is. I mean, we are up against trend highs. The Kiwi, the dollar Canadian, we continue to trade below the 200-day moving average and wedge broken support. So it's broken support acts as current resistance. We are still below that and holding. So now if you break below 124.50, this thing's going to, it's going to look like a, butt stain on Stelios's underwear after eating chili. I'm just I was trying to get your attention. Did anybody like wake up there when I said that?
I just had lunch, man. Seriously, just had lunch.
Hey, man, I know everybody in Europe is like, dude, I just ate. I just
like a beaver on a slide. That's what you should do.
Brand said you got me on toe cheese. Yeah, I did the toe cheese one day, and I think some people got a kick out of that one too. All right, so let's continuing on. Look at the dollar MEX. I mean, the dollar MEX is trading heavy. I own some. I'm not happy that it's rejecting resistance, but I also know we have a lot of key support down here. Anyway, the fact of the matter is we got major support coming into play around 1980. You got, dollar Norway continues to trade heavy below the 200-day moving average, even though we hit the 161% extension just 2-3 days ago, and we talked about it. It sucks because I actually had a bid out there that it missed. Anyway, it's still trading heavy though. I mean, it may have bounced, but it's consolidating. When it consolidates at lows, that's not a bullish sign, right? I mean, when you get some selling and then you just stop and then you just sit there, that's not bullish. That's the opposite. So, price action is definitely weighing heavy. Rand, new lows below the 618 retracement. I'm long a little bit of this too at the 618, but it's still trading heavy. And then we got the dollar yen. So I mean, you just look at the dollar all around, Dale. And I'm not, I know that's a very long explanation about how I feel about the Aussie, but the fact of the matter is, it's not just an Aussie story. You have to look. I think you have to look around at the dollar and knowing that it is fiscal year end in Japan, and the dollar yen is definitely a driver in the dollar index. Then you have, the dollar, the euro, which is trading above 111.20 at the moment, which looks strong. I know it's pulling back right at this very second, but it's still, I mean, look overall, it's looking strong. And, this was the chart of the day yesterday on the dollar index. And I'm going to point it out. This is a 38% retracement right here. Let me get rid of this arrow that was drawn from yesterday. 97.60. That is the 38% retracement. And if you can see this, I mean, let's just we'll go zoom in a little bit. Oops, that I did not want to do. There we go. Hold on, hit the wrong thingamajig. So if you look here, there, and there. So you can see how important this 38% retracement is that comes in at 97.60. It is vitally important to the market to hold. And if that level gives way, you've got the dollar that's probably going to slump back down towards the 96.50. And then you have to think about, if you own dollars anywhere in any way, shape, or form, how's that going to shape your portfolio right now? Blake? The only thing that I think is that we have to really be paying attention to if you're trading dollars is you got to be paying attention to equities, because equities are holding above 4,600 for now. The S&P is holding above 4,600 for now. I think me, you, and every other monkey's uncle's brother's sister's nephew was looking at the S&P, rejecting up here around the 4,550, 4,600 level. I wasn't the only person saying, hey, I think the S&P is going to stall around here. Everybody was. So it was kind of like easy.
Got ADP in about 20 seconds.
What's that?
ADP in about 10 seconds.
Thank you. But I think it was easy pickings to the upside. But now that we've taken all the stops, the question is, what happens there? All right. So with ADP, let me grab the data flash.
455.
Yeah, it's in line.
450 expected. Yeah.
Oh, it just came out. Okay, so we get this. The data flash is included with ForexAnalytix. It shows you as data comes out. It's about as quick as Bloomberg in many respects, which I use Bloomberg and data flash together quite a bit, and for many years. And that data flash is really nice feature to have in ForexAnalytix. Anyway, all right, ADP's in line. I really don't think that the jobs report, even non-farm payroll this Friday, is going to move the market a whole lot. I'm at this point in time, the only thing that would derail the Fed from raising rates multiple times this year aggressively is if you start to see consistent jobs data that is weak. And that is, when I say weak, I'd say, that we're losing jobs. And if we have a month where we create 100,000 jobs and it's 300,000 less than expected, the dollar might, or the market might move a little bit. It might get jarred a little bit at that moment, but then it'll shake it off again because it's like, okay, it's not going to change the Fed's narrative. If we see consistent weakness in the jobs report, then we have to start paying attention. As you all know, the data that really matters right now is inflation. So no one really cares as much about jobs. Most of the times jobs matter, but right now it doesn't really matter. Anyway, those are my thoughts about the dollar. And
speaking about inflation.
Yeah.
Sorry.
No, please go, because I'm done.
No, I was
Stick a fork in me.
Okay, I was just going to say, speaking about inflation, we got some inflation numbers out of the Eurozone today. So Spanish CPI, 9.8% year on year. That's up from 7.6% previous. And we have not seen yet the effects of the Ukraine invasion. So, and also German CPI.
Hope you guys stored up on bread.
Year on year. And we had an ECB. Yeah, man. And pasta. We had one of the ECB members, I can't remember the name, who was saying, yes, we should be seeing a rate hike before the end of the year. I personally think if this thing persists, we're going to see it before that. And yes, I know the ECB has always been dovish and, they're the last to move, but they have postponed this as much as they physically can, I think now. And, I think they're going to be moving earlier. And that's one of the main reasons why I like the euro this year. I'm not saying that the Eurozone economy is going to be doing great or blah, blah. No, I just want the market to price a few more hikes for this year. And I think the euro is going to be lifted by that.
You're the man.
With the plan.
130, what, euro dollar?
You're the man.
That's a bit extreme. That's extreme, but I think 120 is very doable. I know I might sound like a fool now, but I think it's very doable this year.
You can't sound like a fool.
You know what? Well, when we were at 120 last time, everybody was balking for 130, and so here we are at 110. For you to be reaching for 120 in light of the current environment, I don't think that's really that far off, and that's the kind of the point I was making in the blog post yesterday. If you guys, this is free. Just I try to write it every day. It's depends on the day, and it depends. Like today, I don't think I'm going to be able to get a chart of the day out because I have some soccer right after the market closes today. But one of the points I was trying to make here is, despite what's happening in Ukraine, despite the aggressive expectations that the world has on the Fed. I say the world has, it's like every analyst out there. I mean, we all are expecting the Fed to raise rates aggressively this year. And how come? So I guess the question is, how come the dollar index is not, well above 100? And that goes the same question with the euro. I mean, why isn't the euro well below 108? And I know I make this point every day on the F.A.C.E webinar, but I'm like, okay, well, if I didn't know anything about anything and I just was told Blake, Russia just invaded Ukraine. What do you think is going to happen with the euro? If I didn't know anything about the markets, I'd have been like, well, I'm sure the euro is going to be significantly lower. And I would have thought myself personally, as we are heading into this, euro is going to probably eventually just trade down towards parity. So, if the fact is, and that didn't happen, the fact is that the euro's, it fell initially, but it's really bucked the trend. And if we get any type of positive news there, then then we're going to be left with a eurozone that is plagued with massive inflation, as Stelios is pointing out. I mean, that it is going to be a problem for you guys moving forward. Like a lot. Like you look back and you look at like what happened in the U.S. You're like, okay, COVID. Governments flooded the Fed, and the U.S. government flooded the U.S. economy with a ton of cash. Of course, we have inflation, but no one expected Ukraine and Russia, and for that to bite you guys in the rear end, right? That was not foreseen.
No, we're having this exact conversation just right now in the comments on this F.A.C.E webinar with Mike Delfino and Laura's asking, is how do you spot these moves? Well, when you look at the wider picture, okay, we've priced the Fed. Okay, the Fed got priced months ago about what they were doing, and now the market knows the Fed's hiking. Okay, so we're arguing over the cherry on the top as to how hard they'll hike or whatever, but everyone knows the Fed's hiking. So there's no trade left there in reality. So you have to look at the other central banks. What are the other central banks doing? Well, what can we see in the Eurozone? As we've seen today, inflation is through the roof. It's not, and the ECB are still sitting on their hands saying, yeah, we're ready to act. And the market's sitting there going, well, when the hell are you going to act? Because if you're not going to act, we're going to start pricing that you're going to act. And the longer you leave it, the more aggressively we're going to price it that you're going to have to play catch up, and play catch up harder and faster than what you would if you were hiking now. And so that brings the shifts. Now take the Ukraine out of the situation, and euro dollar would be probably trading right now up at near 115 on those inflation and ECB expectations, if not higher.
There's a new headline about Ukraine that just came out. Zelensky says Russia is sending new forces.
Oh, there we
That's
go.
why you got a little pullback in
So a little pullback.
some of these marks. Yeah.
But this is how you trade the big fundamental changes and the big shifts. Why isn't the euro going down? The euro's not going down because everyone is now going, ECB, you got to do something. You're going to be forced to do something, and maybe go as aggressive as the Fed. And when the market starts moving that way, that's when you get the big trends. I would not be surprised if the Ukraine situation gets resolved pretty quickly, that we're not seeing euro dollar at least above 115 over the next few months.
All right. Well, there we go. And Brian, thank you for your comments. I'm going to ask you guys. So let's talk yields really quick. How do you guys feel about yields that are just persistently strong up here? And are we inverted yet? What are your thoughts on yields where we stand?
Okay, do you want to have one? I don't know if he's
Peaking with the yen.
peeping. Well,
Are you talking to me?
Yeah,
I'm talking to anybody. Anybody. What do you?
but we haven't heard from you. So
I'm sipping my coffee, waiting for your response.
yeah, you're
What
so
do you guys-
polite, Kman. Jump in, buddy. Jump in anytime.
I think
Okay, man, it's good to hear your voice. So, what do you think about yields here and the strength that we're seeing?
on the US rates, I think we are going into a range until we know about the Fed's decision in May. I really think we are going to stick into this range because we are expecting them to act. Most are now expecting that May is going to be 50 BPs. But we are also waiting to see what they are going to say about quantitative tightening eventually. So for now, I would say US rates are going to stay in a bit of a range. We've got other central banks way before. I mean, we've got in April we do have an ECB, we do have an RBA, an RBNZ, a Bank of Canada, and see what they are doing. So this has been the dollar story as well, and one of the big reasons why euro is not falling further is that the European yields are actually rising as fast as the US yields are doing, because the market is pricing ECB completely behind the curve, which is holding euro dollar up. Because I must say I don't really agree on the big euro upside move. I think if ECB because the Fed is going to raise still before the ECB.
Yeah, but I hear what you're saying, man. I hear what you're saying, but again, this is where the market is the market. I'm talking the market as in general, not an analyst too, is behind the curve, not just the ECB, right?
No,
I mean,
the market
is completely priced in what the Fed's going to do.
Yeah, so they are in front of the curve. The market is extremely in front of the curve. Look at the 2-year yields, the 3-year yields everywhere.
Okay,
the market pricing everything that the central bank.
The currency market is not in front of the curve.
Sorry,
the currency market is not.
But
I mean, again, going back to my comments, like
it's a different animal.
The move has been very minimal, and then I look at the dollar and say, you know, after seeing this move in the bond market, like this is the 10-year, just so you guys are referencing what I'm looking at the moment. You know, you see this big move in bonds, yields are coming out of your shoes right now. We're seeing mortgage rates that we haven't seen since 2019. I'm so irritated that I didn't refinance to get my mortgage under 2%. I'm so irritated. One of my buddies got 1.75% for his mortgage after he got in a fight with the mortgage company, and they adjusted him lower. But anyway, the fact of the matter is, you know, rates have gone back through the roof, and, you know, tightening conditions are tightening, and the dollar has been like super unresponsive. I mean, that's all we got.
But the dollar did
because the rest of the yields are much higher, and that's holding the dollar from strengthening a lot further. And the market, it doesn't really know in how far. US is going to get involved in this whole Russian-China story, because China this morning said that they chose Russia's side, basically.
Okay, right? so you
look at that DXY chart. The DXY chart from the bottom. That's your dollar move. You know, but what more do you want from it?
That's what I'm saying. That's the point I'm trying to make. It's priced in.
No, you're asking us, Blake. You're asking.
Well, I'm asking, but I'm trying to say.
Well, you're asking our thoughts. Just give me my thoughts.
I'm trying to make a point that the dollar. I'm just looking at the dollar, saying, okay, then, you know, the dollars stop responding. I mean, let's put it another way. Let's go back to the beginning of this year. And you know, let's go back to the beginning of this year. So we're talking about January, February, right? And remember, expectations in January were the Fed was going to raise rates maybe 3 or 4 times this year. Now expectations are like 7 or 8 times this year. And Russia invaded Ukraine all in the same time. So this whole time period right here, all that happened. And I'm going to say it again. I look at the dollar and say, damn, that's all you got. You know what I mean? And I've been playing the dollar on the long side. So, you know, not recently, not over the last like month or two, but really, you know, earlier this year, I was, you know, playing the dollar long and blah, blah, blah. But I expected more. And so, you know, I don't know. I guess this is where, you know, you start wondering, you know, can the euro make it to 115? Can the euro, you know, make it even any further? Does the euro get smacked down again? I don't know. It's a tough call. I guess that's
I get what you're saying. Yeah. But then, you know, then don't look at the dollar. Look at what the effect of the dollar not moving means for other currencies. You know, it's like I'm doing exactly that. You know, I'm long Aussie dollar because the Fed trade is pretty much done. And as you know, I've been calling bollocks on the RBA for months and their old 2024 rate hike call. Now the market's saying they're going to be hiking maybe as soon as June. You know, if you want to make money trading the fundamentals, trading the central banks, trading all the expectation, that's what you got to look for. You got to look for when a move has finished, and then go the other side, because FX pairs always have two sides, and so if one's not going to move, the other one's damn well going to move.
Right. Yeah, I don't know. It's a great debate, and I appreciate you guys giving your thoughts and ideas in around this idea, because I struggle with the dollar index. Like, I struggle with the dollar, and Brand just said it in there. I just caught his comment, and he said it correctly. I'm disappointed in the dollar. I'm surprised that the dollar just didn't have more oomph. I really thought, and I was actually hoping, and I was hoping more for volatility reasons. I was really hoping that the euro would have broken 108. That was like my ultimate, like, we break 108, it's going to be an elevator shaft down to 105 pretty quick. And I was like, dude, I'm going to crush it. That was my initial thought. Like, the euro's dumping towards 108. We're going to get a nice solid close below 108. I'm going to leverage up some euro shorts, meaning I'm going to be more aggressive than just my normal size, and look for like a stop loss run all the way through, down through 106 to 105, down towards this area. That's what I was really hoping for, based on the argument that I just gave you. Look, there's a invasion. How's the ECB going to raise rates? But the Fed's still going to raise rates because they don't care, because it's happening in Europe. I mean, they do care, but it's not affecting U.S. economy, but we still have to fight inflation. So the Fed's going to continue to raise rates. And that was the
expectations. I think your expectations and as Brand's expectations are a bit too much. I mean, you've got to look at what it's done. Euros dropped from up at 122 to under 110. That's a big move in any year. A big move in any year. You can't,
so now
I've just closed my longs in dollar yen that I've had since 2020. Got hit on my trailing stop at 121.50. I've rode that for 18 months purely based on everything that's happened over the last year. Inflation coming, the Fed getting caught behind the curve. And it's rallied all the way from 103.10 up to 125. It's a huge move. You don't get that over. You look at the weekly charts or whatever. You don't get moves like that every day. And to say, maybe it should be higher.
Yeah,
it's how high do you want to pick it?
Yeah,
well,
right.
We have a guest here, guys.
Oh,
sorry,
crap!
Guys.
I lost track of time. Hey, I just want to say thanks everybody for listening in, and thanks for the conversation, debate, Kman, Ryan, Stelios, and his dirty diapers. Just kidding, Stelios. I'm joking. I think
he's the man.
He is the man. He made a great call on silver yesterday. He's like, I'm picking it up at 24.01, and it dropped to 23.80 something, and bounced
he's a
like
silver
a bat out of hell. Crazy. Hey, if you guys have not signed up for the Trader Summit event, it is a free event. Did you see the speakers? We have a lot of great speakers that are going to be here. It's going to be pretty cool. I'm actually going on a podcast with Anthony Crudelli and Tracy Schuchart in like a week or something. We're going to go on his podcast and talk about the Trader Summit event. It's going to be great. Don't forget to register, because it may be free to register, but seating's limited for the live. Like, if you're trying to log in live, our first year we had people log in and couldn't log in because we ran out of our license. We didn't have we just had too many attendees, so they got to view the recording. But if you want to be there live and be able to see the questions answered as they're being addressed from the crowd, and you wanted to ask a question, especially there are people here that I have not been able to talk to personally, that I actually have questions for. So, and they're not only going to take my questions, they're going to take yours. So make sure you guys get out there. And I'm going to put the link here for everybody. Register. And Dale, have a great interview. Thanks, team, for being here. Ryan, Stelios, Kman, and Dale, of course. Thanks, everybody.
Thank you, Dream Team. Nargis, welcome back
Hello,
to
good morning.
F.A.C.E. Yeah, welcome back to F.A.C.E, Nargis. Great to hear your voice.
Thank
How
you,
are you?
and thanks again for inviting me, and Happy New Year.
Happy New Year to you too.
I know the
And
quarter is ending, almost the last day.
yeah, quarter end. Are you going to be sharing your charts here?
Yes.
All right. Before we got into the markets, Nargis, I
Yeah.
know that we probably talked about this a long time ago, but what were you doing before you became obsessed with market geometry and following markets, and how did this happen for you? That maybe was what was your first foray into trading or investing? What's the genesis of your secret agent 007 market style?
So, Dale, I live in Silicon Valley, right?
Yeah.
So people only do hear one thing. mostly, not everyone, but yeah. So I was also a computer science engineer working in the IT company. As my last job was like a product manager, business development manager, and then I was pregnant with my second son, and it was a little bit difficult pregnancy. So after he was born, I thought I'd take a little bit of break, and I had not been with my older son as well when he was born. I immediately went back to work, so that guilty feeling was there that I didn't spend too much time.
Yeah.
So I thought, let me take a couple of months of break and spend some time with them, be home, with the kids. And then I was like, what will I do home sitting, right? I mean, the kid
Right.
is there, but what else will I do? So
You can't just sit there and eat bonbons and watch soap operas.
I know.
Right?
So yeah, I know exactly. And I had to keep doing something.
Yeah.
So this
You
was
engineers
always,
are naturals for technical analysis and analyzing markets. I remember when I was prospecting for accounts, if I had a prospect that was an engineer and I just started talking about technicals, they really gravitated towards it.
Hmm.
So, did you see, that kind of mind and the way engineers think, how charting could be, second nature?
Yes, it's kind of like that. Basically, curiosity for answers, mostly why it happens this way or what is happening. For me,
Right.
it is that way. I need to know the answers of why it is happening or what's out there. Even if
Right.
I'm driving on the road, or walking or going for a hike, I need to know where it is or how far I have to go. So
Yeah,
so I need to know.
details.
That's it.
Yeah.
So So
What a
I
great
think
story. So, all right. So you started. How did you start? Something online, a course, or just
no.
go into it
Just go
on your
into
own?
it actually on my
Okay.
own. So
Yeah.
when I was working, there used to be a guy, and then we used to talk. So I was like very novice in this stock market. When I had come here, I hadn't heard about it also. So I used to feel like these people are so smart, they know so much, right? And I was like, how the hell I don't know anything. So
Yeah.
so so then he used to talk about this is 10 SMA, there is 200. Then I thought, oh my god, there's a little bit structure to it, it's just not so random. So when
Yeah.
I sat in my break, I started going, and then I thought it's more than that. So every day I used to sit and monitor the price and note down the price at 12:45 p.m. I mean my PST time. This is
Right.
where 10-day SMA is, and this is where the price closed, this is where the monthly price closed, and then I used to see a pattern of what's happening. But then those days are gone where the SMAs and your traditional indicators used to matter a lot. Today they
Yeah.
don't too much, right? Because
Yeah.
the environment has changed and your technical indicators are not there. Maybe they need to be redefined a little bit, probably.
Yeah.
But
It was probably
yeah,
pre-algo when you
yeah,
started.
yes.
Yeah. Okay.
I've started seeing this change in temperament since 2018. From there,
Okay.
the shift has started,
Yeah.
in my opinion. Maybe before that, but that's where I started seeing stuff in 2018 January, when everybody was like long, and I was like, your monthly RSI is 87 plus, almost hitting 90. How long can you go long, right?
Yeah.
So,
Yeah. All right. Well, yeah, I forgot it was because you wanted to stay home with your baby. And
yes,
you know,
that's how it started. And then
Yeah.
I don't think any job would interest me too much anymore unless it is something related to this.
yeah, I know what you mean. You know, it's like
Yeah.
Hotel California. You
Yeah.
can check out, but you can never leave. Even if you leave,
Mm.
you're looking at it, right?
Yeah. Yes.
All right. So here we go. The $1 million question, and I know you have some. I'm going to be interested because of what my bias could be. Is this a failing rally or new highs coming, Nargis? That's a $1 billion question.
Yes. So remember last when we had talked, I think this is the one which I had shared with you when we talked last, is that ES had reset the cycle to 7569, right?
Yeah, I couldn't
So
believe
sooner
that
or
number.
later,
Yeah.
we will go here. Okay. How we will go here is the path we need to carve it out, right? But
Wow.
it will go here. And this would be the in-between price. Like, you know, from this 4489 is the price cycle it completed. And after this number, it fired this number. So this is your midpoint of 4489 to this, right?
Okay.
So what I was thinking is, you know, last time when we talked, I was thinking like if we can just, you know, pull back from here to somewhere, you know, here, then it would give a little bit relief because this was very heavy. And if you could get this, then launching up here can become more easier versus continue to keep going up, right? So now we did got this pullback coming in. It didn't go all the way here. It stopped at 4100 only. And, you know, I was wondering why 4100 it stopped, whereas 4065 was my level also to come down. And it should have easily done 3970 to 3800. And I was like, why would it stop at 4100? So, you know, interesting thing, what I, again, you know, go find the answers kind of a thing. So this high, February high was 3397, right?
Right.
And the our current high, all-time high is 4808, right?
Yeah.
So 50% of that is 4101. So it did high to high 50%. That's one answer I could get for myself. I don't know what it means, but you know, that's how maybe, I don't know if the algos came up then with the number like, oh, this is high, just divide by 2 and go there. That's it.
Okay. What's the level now after this bounce that negates the bullish scenario?
So we are almost at you know, I can't, this panel I can't see. So this we are almost here. You know, so this quarter is almost ending flattish, right? We were at 4100 down here, and in less than 2 weeks we recovered almost everything. So this is almost getting into the, you know, this cluster of close to 4700, where earlier we used to go in but fail, you know, it used to throw it back. And a very brief period, this small structure is where it went past 4700. So this area here is where we would one more thing I wanted to say before I say that is, I know a lot of people do fibs that, you know, it has reached 50% or 618, and 618 is where generally people think you know, it's a moment of pause basically to check whether success or failure. But in my opinion, what I have observed is ES is never satisfied with 618. It is never satisfied with 618. It always goes higher, almost to the as close to 100% as possible. Almost 85 to 90% it will go. Okay. So yes. So unless and until it is here, this will still be, you know, see, this was 4101 high, low, sorry, I'm sorry.
Yeah.
And then this was 4129. And
Right.
when it went in the night, we would think that almost it is ready to break and go lower, but it stopped at 41.29, which is not only a level, but also the 82% of this,
Right.
high to low. So this is how it likes it. It likes to throw it off. So currently we are approaching 786, I think, if I'm not wrong.
Yeah.
And we have a little bit more here. So I think till this line. So till this line, we are
760.
okay. I am still okay it as a retest.
What's that,
And-
88 too? Or more than
Yes.
that?
Approximately it will be 88 too.
Okay.
There. So I had 47, 25 or 30 around 80, 82. And there I would consider, if it is going past that, then we know that it is almost going to make a new all-time high, right?
Yeah.
But
Yeah.
but in between these two lines, it is still a retest of the high. I'm still considering, and this is a vicious rally from this high.
Yeah,
This
very
line,
vicious.
it's exactly like this line. They're both the same, and it is approaching this area where entering the supply area, basically, if you can
Okay.
say that,
All
right?
right. Yep.
So that's there. And the other thing which I wanted to point out was when we hit the new high, 48.08, this was December, I had posted out that, be careful that a bearish pattern is forming. And since this was a straight line, the first cut would be, return to mean, right? And from
Was
there
that a
we see
Gartley?
where, yes, to drive, and it did hit 272, almost 4100,
Okay.
all the way directly. So yeah,
Nice.
so these do work out, and I do have a similar pattern for the current scenario. So the price is still going up on a bearish this 2 drive, and this D is an extension, right? So it would still satisfy until it goes all the way till here, this blue line, and coming down, the lowest target would be your 2020 high, almost.
Okay. Yeah.
And these would be the if it works out. Again, it can negate, and it will cancel out, which means that we'll be on the path to. So I had drawn these two paths, considering this is a pole and this is a flag, then let's say it pulled back here. It only pulled back, I think, 30%, not from the March low
Right.
to current high. So
Take a
it's still
snapshot of this, everyone. Take a screenshot. That's really nice.
yeah.
Love it.
So I have this. This is I post it on Twitter, so the chart doesn't vanish. So it's there.
Yeah. Okay.
So so here
Yeah.
we
We're either
go on
going
to
to
the
new
happy
highs
path.
or we have a failing rally. So, I mean, that still is the question, right?
Yes.
And there's no way to answer the question yet, is there?
The reason for that, Dale, is look at here, this portion, right?
Yeah.
And this portion. This is starting from last July almost.
Yeah.
And we are still there from last July. It's almost going to be a year, and price hasn't moved. It is still in this tight range. For very short, brief period of time, we went a little bit above and got smacked right down. So unless and until, where is the box?
And you know what,
Unle-
Nargis, do you take into account that even though the averages are the same place they were a year ago, how much damage has been done to many different stocks? I don't have to
Yes.
just say ARC, where they've broken 70-80%, and that underlying makes the structure weaker.
Yes, definitely. And you know what? I had mentioned this. Dale, it's somehow I think the kind of work I do, it looks like crazy sometimes.
Yeah, like
because people do question, you throw out numbers out there which are crazy, and
well, you have to
it
take
doesn't-
that picture off of Instagram with a tinfoil hat on.
So,
That selfie, that you're going to give people the wrong impression when you're sitting under your pyramid.
I know. So
Yeah, so people think it's kind of crazy, but there's order in your chaos.
yes. So what was happening is last August, approximately that time frame, not from that July to October time frame, most of your growth stocks had completed their maximum cycle. So generally in a price cycle, you would do one price cycle, right, and then consolidate, do something, then try to fire something else, right? That was the older order, right?
Yeah.
But this 2020, because there was a pandemic, and what will you do sitting at home, right? If they made you sit at home, then you need to do something. So said, okay, this is the stock market, go play with it, right? So they fired the cycle like crazy, and all these growth stocks were running 100%, 200%. In a day or 2 days or 3 days, they would be 30% up, right? The Cloudflare and Snowflake and blah blah blah, they would be all up in the air, and people were so excited. And then I used to come and say, from last July to August, I started saying that, hey, these stocks are completing a major cycle, and especially their monthly monthly was very much straight lines, and some of the stocks which were had some history, their quarterly charts were out there crazy. Why would you not take your profits when specifically it is becoming so heavy, it is reaching a price cycle, and it is almost a straight line on a monthly basis? It was time to book profits versus going in new or adding to it. And if you check most of your stocks, they all reset themselves. They gave back all the gains from the breakout, came back to the 2020 high, or some even poked lower. So assuming this was your consolidation, this square stopped on the upper this thing, some would come here, and few of them broke their low of March 2020 as well.
Yeah, they're broken. Yeah.
So it all depends on the
like
type
Facebook,
of company.
Facebook and Netflix, broken stocks.
Yes, so Facebook also came to this consolidation of March, right? And then from there, it, so at this point, I had said I would buy here because when you're falling into a virgin demand, Dale, which has the price has run away too fast, and that is the only place it can come back to, right? So it came back all the way here. Then you have to decide. This would first give a knee-jerk reaction. Most of the stocks would give a knee-jerk reaction right here to bounce back.
Yeah, right? You may not go to new highs, but you could recover 50%.
You could recover. Yeah, you could recover something. And these stocks are still nowhere in terms of recovery as yet, right? So Facebook is almost, almost towards the low itself versus little bit. So going into this area would be saying, oh, okay, it has retraced a little bit. Or other people who are in it, they have recovered a little bit, but here it is still this thing. So there are two stories. One is, is the index going to fail to bring to new lows? Then what will happen to all these things which has already so much damage? Does it mean that they are going to go more lower than this area and come down? That can happen. Or if all the growth stocks have come together around the same time to around the same demand area, does that mean that this was a good bottom for them and they could at least minimum retrace 50% from here to, first repair the technical and then come down? So that's the question. Even I am looking forward to see how it plays out.
Okay, Anthony is asking, do you have similar feelings about PayPal and Square?
Square I just showed, right? So see, Square bounced back so well. It came to 82, and I had put out that 82 number there, 81 actually, 83, 81. So from there it bounced back nicely, and it's almost reaching this. If you remember, Dale, I think we had talked about IWM.
Yes,
I will show you this. The reason I had mentioned this is that since this is a straight line, and when they try to fall, they don't have enough to hold them, right?
Right. Yeah.
So but
enough
the only
structure.
So the only thing IWM was there to hold is on a weekly basis. This 2-3 candles it had, and that's where it rested. Okay. Right. and now it's trying to go back. So again, is it a retest of the high? And somewhere here, if it is entering here, then somewhere here will it fail and then come back on this blue line? That's a good possibility, and there's a gap as well here. So that is one thing which definitely can happen. QQQ is again doing the same thing, almost trying to retest the high.
Yes.
This is also 317. I think we had talked about this also. I remember I had said 311 or so it should come down to, and this exactly came down to 317, not 311, but yeah, almost 5 points.
Yeah.
5-6 points less. It's okay. So just resting on these demands basically, and your March 2020 would be here, which means this would have a long way to go, but it does have good support system. And if it is again a flag, then would it break out towards 500, because that's a mental nice even number, or it would go up till here somewhere and then fail and come down. The whole reason is because price hasn't left from this area since trading from the last year. We are still in a heavy tight, this orange box.
Yeah.
So, either it should exit out of this year, then we know, okay, it's invalidated and we are on to new highs, and come down. And then we know we are on to newer lows towards 3,700 or 3,300, which would be the.
Oh, you mean if it takes out 4,100, won't you know earlier?
Yes. Yeah, we would know earlier, because for me, once you lose your price cycle 44.89, then I know the weakness has set in, and then somewhere here
44.90 about is a line in the sand.
Yes, and this red line I have marked here, this I would know is it will definitely mark bigger weakness, and taking this out low would not be a bigger thing for it if it wants to do that.
Okay. Do you have a view on the dollar? Big debate right now.
Yes, I had just taken out the dollar Dixie.
There it is.
I think it was here. Yeah. So Dixie is just hovering around 100. It hasn't taken out 100, right?
Yeah.
Just traveling around this line on a monthly basis.
Nice.
So slowly it can try to creep up, and once it loses 95, then we know it wants to go lower. But as long as it's holding this dotted line, it can still try to push over this this resistance line. So
95. Yeah, 95 is your bull bear line.
Yeah,
and we could still move, and we could still move higher.
Yes, and we could still move higher, and there is this, because of this noise right here too, and here too, and so now it is above this structure, right? So this is this area is kind of a mirror of this, right? Just flip it up. Okay. So
how about oil?
Oil, yes.
Because we're running out of time. So oil. Is this a failing rally we're getting here, Nargis? Did this just happen?
So oil. This is last June, right?
Oh, okay.
Last June, I had mentioned that some important oil is trying to hit above in a very important number that was 59, and the yearly chart was trying to go above a technical, like say 10-day on a yearly basis. And I had mentioned that if this is bullish, then we could hit all these numbers, right? 107, 125, and 147 was the all-time high at that time. And with if it wants to surpass, first it should go here, and if it surpasses here, then we have some higher numbers. And the thing didn't disappoint, and it did hit 130.
Right.
And so see, look here, this quarterly basis, it broke out and it didn't stop. It hit this supply area directly, and 130. I'm not sure. I had drawn a crazy picture. If it is here. Yes. So I just, curves and lines I see, I just do these curves, right? See, This was what, when it fell out of this tight, it started, squeezing and then pushed it out. And this was these two orange line. So this was the candle. So 125 was my number. So from this this curved line low to this high, it did 1618 at 130.
Okay.
Here. 618 at 130.
We got the history. What about the projections here?
Projection is, I think, oil, it should calm down from here. But one thing is, it hasn't hit that one that was done in Globex. It did not hit the regular trading hours, right? 130.5. So for me, that is pending. It needs to hit it during the regular trading hours. And once it hits that, it may poke a few points here and there, but then it should come down below 100.
Okay, so you're looking for a retest of the highs.
Yes, retest of the high, touch that 130.5 during the trading hours, and then from there it can come down, break 100 and come down. I mean, it can do before also, which will only mean one thing is that 130 hasn't resolved, and in future we will see that number sometime. The faster it resolves these anomalies, the better it is for a clean price versus, like for example, this ES, right? This 4101 was made in the night, right? It was not made during the, so what you don't
trust those sessions for the lows. Okay,
so ES, yes, so ES has left a clue right here that I am going to come back for it.
How about that?
So yeah, so I look at things like that, just a data point stored somewhere that, do not close that price just like that. It will come back for it. The faster it would come back, the easier it would be for everyone versus, after 1 year, 2 years, God knows from where it will come down.
That's an excellent insight. Nargis, best way for people to follow you is on Twitter at Nargis007.
Yes, here.
Yeah, there she is. And always appreciate your passion, and thanks for sharing the story of how you got into it. And, it's a classic example of don't just count your pips, count your blessings. And
yes, definitely. Thanks, Dale.
Yeah, always give up something for love so that you could have something, that memory you had with your baby. And appreciate your great looks, Nargis.
Thanks a lot, Dale.
You know what you are? A pro.
Yeah. Oh, wow. Thank you so much. That's big coming from you.
All right. So everyone, thank Nargis. A lot of people enjoyed it. Mr. Buttons is a fan of yours. Anyway, that's his name in here, Mr. Buttons. So thank you so much, Nargis. Have a great day, and I'll get a hold of you, and we'll talk again a few months down the line.
Thank you so much,
It was
Dale,
fun having a date with you on F.A.C.E.
Oh, yeah. Oh, my God. Dale, the markets are at the high and we have met. Then you know what follows. Guys, get your puts.
All right. Thank you, Nargis. You could join the team, everyone, in 12 minutes on the Morning Edge. Thanks for your attention. Adios, everyone.
Adios.
Thank you, Nargis.
Thank you.